Welcome, welcome back to this channel. This is Unfiltered Forex with me, Clement, and I am here to do a short forecast of what we are expecting this week. So let me start. Um, Before even we look at the calendar, this is the week we'll be getting the CPI and the European Central Bank monetary policy decision. So let's look at the events on Monday. Nothing much really. Yeah. Okay, let me apply a filter to reduce this noise. Don't want to see too many events. Apply. So, yep, here we are now. On Monday, nothing really big. Nothing major here. On Tuesday, we're getting some employment numbers of Great Britain, and yeah, that's pretty much the only big thing on Tuesday. Yep, there's also some OPEC. This is big for oil, of course. You can just let that slide. And then coming on to Wednesday, this is where we get the GDP of UK and some other important data to do with the GDP of the UK. And then yeah, the CPI. This is where now on Wednesday we get the CPI for the US Consumer Price Index. As you can see currently, the month-over-month change for August is at 20 basis points. Same with the previous this is the forecast. And then the core CPI year-over-year change is expected to drop to 4.3%. A slight, yeah, the previous reading being 4.7%. It's about 40 basis points. Yeah, a drop by 40 basis points. CPI month-over-month. Now this is for all items included, 0.6% up from, this is the forecast, and the previous reading was 0.2%. So as you can see here, the market is expecting the headline CPI numbers to come up a greater number than the previous month's reading. So for the CPI year-over-year change, we can see here the percentage is 0.6%, up from the previous reading I got of 3.2%. So this is just telling you, in terms of the headline CPI, we're expecting an increase. And in terms of the core CPI numbers, we're expecting a decline and a stagnation here. So when the numbers are looking like this, as you know, it's best to just go with the most likely outcome. The most likely outcome in this case being that we are likely to see, of course, this headline CPI for all items is, of course, because of the energy prices. As you have seen, the US oil chart, the price, it really picked up in the month of July, and we didn't see that reflected in the July. We didn't see that reflected in the July CPI report, but maybe it's going to be here in the August CPI report. Something else you need to consider when you're trying to guess or make a forecast of what's going to come in this CPI is to look at the PMIs. I'm sure you remember I'm sure you remember the most recent ISM services and manufacturing PMI we got for the month of August, and you saw what the price index did. In fact, let's look at that. Here we are. This is the ISM services PMI, services and manufacturing PMI. So this is for the services, and this is the manufacturing one. Okay, so as usual, as you know, we usually look at the price in the indices when we're trying to look at what to expect in the CPI. Let me get my pen so we can look at this. Here we are. Let's, yeah, we're looking at the prices indices. This is for the services sector and the manufacturing sector. So on the services sector, for the PMI prices index for August was at 58.9, and the series index for July was at 56.8. There was an increase of 2.1%, which shows that it's increasing and it's increasing faster. This is because, yeah, if it's above 50, it means it's increasing. And yeah, since it's above 50 and it's also above the previous reading, it means it's increasing faster. So trending months, 75 consecutive months of prices in the prices index in the PMI rising. So next, the series index for August and July compared to July for the manufacturing sector. For August, it was 48.4, which means it's a contraction. And compared to the series index for July, which was 42.6, that's an increase of 5.8%, which is very significant. So comparing two, compare these two readings, this of course is below 50, so that means it's contracting. But since it's below 50 but above the previous reading, it means it's contracting only slower, much slower. And it's almost going to 50, we are going back to the levels of increasing. That remains to be seen, but currently this is what we have. It's a very it's a very what do you call it? It's a very big red flag for the prices index. It's a very big red flag for the CPI. But as you know, the BLS, you know what they do. You know what they do. The BLS usually they just cook these numbers, and the data usually comes out and to kind of paint a good to kind of paint a good picture of the economy and say, yeah, inflation is cooling, blah blah blah. Yeah. So it's very likely that we get a reading according to these estimates or slightly below. Now we're talking about the situation on the ground, like how the outcome usually comes out, regardless of what the PMI is showing, regardless of what the PPI for the previous month showed. So yeah, this one for this CPI, it's very likely that we get a reading that is at estimates or slightly below estimates because of political reasons, of course. So moving on, let's go to Thursday. On Thursday, we have, yeah, this is some big data for the Australian dollar. Some, yeah, the euro, the eurozone. Yeah, this is now where the ECB, European Central Bank, will be updating their monetary policy statement. So they're going to release the statement. This is at 12:15 GMT, and the ECB interest rate decision, of course. So this is big for the euro. Of course, we can see we're expecting a pause here, which is not too bad for the euro. But yeah, we're going to wait and see how this data will come out, what this data will say. Okay, what the European Central Bank President Lagarde, Christine Lagarde, will say, and yeah, the speech is here. What she'll say about why they're pausing and what are their expectations for inflation and what is the monetary policy stance they're going to adopt going forward, like how soon they're expecting rate cuts, how soon or for how long they're going to keep rates high. So yeah, this is very important for the euro. If you're going to trade the euro pairs, you need to be cautious on that day. This is Thursday. Yeah, moving on the US dollar, we're expecting PPI numbers. This is the producer price index, PPI numbers and retail sales, and even the jobless claims. These are three big data. In fact, let me zoom this page. Yeah, these are three big, big. These are three big data releases. Yeah, you can see even the PPI is in. You can see they're all in 3 stars. Yeah, these are very volatile releases because the PPI is a price index. It's the producer price index, meaning inflation at the wholesale level, wholesale prices inflation. Yeah, and then of course the jobless claims. It's probably the most leading data piece we get about the labor market, and it's updated weekly. So yeah, that'll be important. And then of course the core retail sales, which monitors the the volume of sales in the month. This time it's for the month of August, which is going to tell us a lot about consumer demand. If it's growing, if it's contracting, how fast is it growing, how slow is it contracting. So yeah, in this case, we're expecting an increase of 40 basis points. The previous reading was 100 basis points. So in this case, we're expecting a smaller increase of 40 basis points, which is kind of good news at this time. Good news meaning it's going to be bearish for the dollar because, yeah, the Federal Reserve, these things, they kind of monitor if the economy is doing fairly weakly, not too strong. If the economy is seen to be strong but not too strong, that of course is what what's good news in these conditions. So yeah, this is going to be good news for the markets. We're going to see the dollar index drop a bit if the core PPI reading comes out at these estimate of 20 basis points, a slight decrease from the previous reading of 30 basis points. That of course is also going to be good news in these markets. Initial jobless claims, even here in this case, if these numbers come out below, no, above the estimate, or according to this estimate, that's going to be good news for the markets, unfortunately, because, yeah, we want to see, okay, the market wants to see unemployment numbers pick up a bit, because if the labor market is too strong, that's going to favor more rate hikes from the Federal Reserve. And of course, that's going to mean tighter financial conditions. Yeah, I can see. Unfortunately, for the PPI, month of month change for all items included, we're expecting a 40 basis point increase, which is bigger than the previous reading of 30 basis points. So this one is, of course, going to be a not so good sign for the market. So yeah, this is something the market is really, really watching out for. This is a very big day, and yeah, this is typically how September looks like. September is usually the month where the market is extremely volatile, and if you're smart, you can make a lot of money this month. And yeah, it happens because some of these big releases, they happen to collide and come out on the same day. So there's a lot of volatility concentrated in very few days on this month of September. So we can see there's a European Central Bank interest rate decision, there's the PPI, retail sales, the jobless claims, and then the European Central Bank press conference. Yeah, of course, these releases during this time window, things are going to be very, very heavy. Yeah, if you're not experienced enough, my advice is you should get into the market, try trading some of course, risk what you can afford to lose, just to understand how volatile the market gets during such a time, and what you're supposed to do. These things you need to see for yourself. You need to practice for yourself, and yeah, just get along. You'll learn. Okay, so that's it for Thursday, and then on Friday, what do we have? On Friday, we have nothing big. Yeah, these are import export price. Yeah, there's the New York Empire State Manufacturing Index. This is usually kind of big deal, especially since these numbers usually they miss estimates by a big margin, and it's usually the catalyst for some price movements. Anyway, we're going to see that, and we're going to see that on Friday. Another reading: industrial production year over year, Michigan 5-year inflation expectations. Okay, so these are preliminary readings, but they are also very important when it comes to monitoring how the economy is likely to do in future. Remember, this is qualitative data. It's a sentiment. So yeah, this is going to be very important to show how the general consumer feels about the economy. And as you know, people act according to how they feel about something. So yeah, if this shows that that the consumer is more optimistic, or in this case more pessimistic about the economy than they were previously, that of course is going to be bad news for the economy. So yeah, we're just going to wait and see. And yeah, that's it for the week. As you have seen, the big big the big days are Wednesday and Thursday. Thursday being Thursday is likely to be the most volatile day of this week. Yeah, especially if you're trading the euro dollar, euro versus USD. It's very likely you're going to see some big moves on Wednesday and on Thursday also. My advice, this is not financial advice. You should just only trade on Thursday. On Thursday and Friday is probably the best day you should be trading, because the CPI doesn't usually produce a clean move. You're likely going to see the market perform a whip, which of course it's not it's not the best kind of not the best type of move to trade. So yeah, you just have to sit this one out and wait for Thursday, or sit this one out and wait for the top of the hour. Once the volatility of the CPI has passed, within that 30-minute time window, you wait for 30-minute time window to end. Then at the top of the hour, if you're going to see a setup, you should get in and manage your risk effectively. See, the problem with this release is the impulse is usually very, okay, very traumatizing, if I may say. Very traumatizing. You can have correct position, you can have a clean, legit setup, but something happens, the impulse just comes and takes you out, stops you out, probably, and the silly page is usually massive. So it's best to sit this one out and wait for that 30-minute time window to end, and then you can decide to get in. Otherwise, that was it for this video. I don't know if there's something else I have missed. We're going just to wait and see. I am done. See you in the next video. The next video, of course, will be when I talk about the CPI breakdown and, of course, the PPI and retail sales breakdown. That was it.